In this video, we'll be taking a look at feature analysis to get prepared for the week ahead. If you love the content, please like, subscribe, and leave your thoughts in the comment section down below. If you're interested in learning to trade Forex professional, check out our complete Forex training course on Udemy. I have the link attached in the description below as well. So today, I just want to focus on three main charts, which is the gold chart, Nasdaq chart, and the Dow Jones, so the US30 chart, right? Because these charts tend to provide us with the best trade opportunities after scanning most of the charts in the market. So starting with the gold chart on the 2 hours time frame, what we can see is gold has been in this massive bullish trend since the beginning of the year, right? And we seem to have broken out from this rising wedge on last week, right? So we had a good breakout here last week, followed by a reversal, which later surprise decline all the way down to the base of the wedge. So when you have a good breakout from a wedge like this, there's usually a reversal that tends to go back to the base of the wedge, which is this current price level. We seem to have experienced a significant bounce off of. So what I'll be looking at for is possibly a continuation of the trend, because after we bounced off of this trend, we moved out or moved away from the oversold level. So price initially went oversold and then bounced off. And if you take this trend line, so if you take a trend line to that cuts across the lows of the move all the way to the upside, right? These higher highs and higher lows, you can see we also broke out from this trend line, which would have also signaled a potential move to the downside, which we discussed last week. Because I know last week I talked about the possibility of price going lower and the possibility of price going higher, and I clearly outlined conditions or scenarios for a bearish trade opportunity and a bullish trade opportunity. So it seems the bearish trade opportunity played out, and now we seem to be trading around this solid area of value. So I'll be watching out for a bit more consolidation. So for a bearish move to the downside, I want to see more consolidation followed by a bearish breakout. So this will give us a confirmation of a bearish continuation, which entry is going to be after the breakout. Stop loss is going to be above the consolidation and leads to the breakout, and we can trade the rest of our positions as we go lower, right? So take profit target, first one obviously is going to be around these lows. Second one is going to be around these lows, of course. So this is only if we do tend to see a bearish continuation following the decline we had after the breakout from this wedge, right? I think we discussed about this last week. So if you pull up the moving average, so I'm going to go down to the 1 hour time frame first. So 1 hour time frame first, this is how it looks. And if you pull up the moving average, so 200 moving average, simple and exponential, you take you can see that we had price tagging this moving average all the way from these lows to these highs, which has acted at a very solid area of support, right? So bounce all the way up to these price levels, good bounces. And then when we eventually broke out from this rising wedge, we also broke out from the moving average. So this is just a classic sell setup. And after the breakout, we had a good retest back to the trend line guarding the rising wedge, followed by a retest of the moving average, right? So this is just a no-brainer. When you get setups like this, you take the risk, you jump in, and eventually those trades tend to play out 9 out of 10, right? So this is a good setup in my opinion, and I discussed about this last week. I'm pretty sure of that. If you follow that video, I think you should have made some money, right? So this is how I'm watching out for a trade opportunity this week. So I'm going to watch out for more consolidations followed by a bearish breakout for a bearish trade opportunity. While for a bullish trade opportunity, this one is a bit more tricky. I'm simply going to watch out for a consolidation, right? So consolidation like this, followed by a breakout to the upside. So this should give us a clearly defined area of resistance followed by a breakout. So this will be a consolidation around this range with a good breakout to signify that yes, the bulls are in charge again. So entry is going to be at a breakout from the consolidation. Stop loss is going to be underneath this bounce, and take profit targets can be as high as this all-time highs. Then we trade the rest of our positions as we go higher. So this Second case scenario for gold, which is a bullish case scenario, and I'm going to be watching out for these two case studies for me to either go short or go long on gold. Now, for the bullish case scenario, you also have to pay attention to the moving average, right? I'm just going to put that up because there's a good chance we, get this consolidation, and by the time we break out, we hit the moving average again, right? Which could maybe possibly send price lower, or we could break out, right? So I'm going to extend this moving average. So let's say, assuming this moving average comes all the way down to these price levels, for example. So by the time we get our breakouts, price tends to touch that moving average. So what you could do is adjust your stop loss to your entry. So that's adjusting your stop loss to break even. So in case we tend to see a massive reversal from the moving average, then your trade will be safeguarded, because there's a good chance we get rejected by the moving average again before retesting to go long. So the best possible way to go long would be this. So I'm going to redraw this. For example, I'm going to get rid of all this just to show you a more classic, trade opportunity on this chart. So it's best for us to watch out for how the moving average moves. So if it goes down, let's say the moving average goes down all the way to these price levels, and by the time we're watching out for this bullish breakout, price consolidates like this and then takes out the trend line and also takes out the moving average, this is going to be a classic trade opportunity for a buy trade, right? So then this will give you better and a more solid confirmation of a buy trade. If we do consolidate, price takes out the resistance level of the consolidation, which also coincides with taking out the moving average to the upside, and this will be a better sort of confirmation for a bullish trade opportunity, in my opinion. So that's how I'm going to trade gold bullish, and then I'll also explain my bearish case scenario and nothing more. Besides that, I think I'm just going to stay away from the market, watch out to see how the market plays out before I pick my trade positions or my trade opportunities. And mind you, there's no guarantee that this happens exactly as I've explained, because there's a good chance price just rips up, right? There's a good chance we just keep going higher, bounce up, V-shaped recovery, come down like this, and just go up. And in that case, we're going to review the chart again maybe next week and see how can spot our good trade opportunities in that case scenario, right? Other than this, I'm going to wait for a good consolidation around these price levels for the market to decide where it's going to head before I jump into this trade. That's it briefly for gold. Moving on, we're talking about Nasdaq. So Nasdaq, very interesting one as well. So this is the 4 hours chart, and I took the liberty to draw a trend line from these lows. So we have 1, 2, 3, and this one almost tagged the trend line but didn't quite get there. But we bounced off of this area of value, so we have a very good area of value here, which coincides with this and now the current bounce. So I think there's a good chance we see momentum shift to the upside right after this decline. The reason is because you can see this chart looks almost similar to the moving average, to the gold chart, excuse me. And I don't think we are going to see some sort of consolidation and a breakout to the downside, because this trend line is a long-term trend line on Nasdaq. So this would only happen if something catastrophic or significant happens in the market. So this trend line dates back all the way to the beginning of 2023, so last 2 years, right? So I don't see price breaking this trend line so easily. That's why I'm expecting some sort of bounce to the upside or a good consolidation before markets decides where it's going to head. Mind you, if you go down to if you go up to the daily time frame, so let's say daily time frame, for example, this Nasdaq chart, I know it doesn't look too good, but if you pull up your moving average, so 200-day moving average, so XMA and EMA, you can see that the moving average closely aligns itself with this trend line, right? So you can see over here 1, over here 2, over here 3. This is the daily time frame. So there's a good chance we get some sort of consolidation. So consolidation over here, maybe another retest of the lows, which will send price into the moving average before we bounce higher. Because I do think this moving average is going to hold for quite some time before we see price breaking through this moving average to the downside. So this one over here, so the reason why we're trading below the moving average over here was because of change in financial conditions in the United States. So the Fed turned from being dovish to being hawkish. So that's the reason why we saw this massive price decline for about 2 years or so. But now we seem to be in a very solid bullish trend on the daily time frame, and I do think even if anything is going to happen, we may see some sort of consolidations around this area of value. Just to reiterate, around this area of value, followed by a move to the upside. Meanwhile, by that time, this moving average would have extended itself all the way up to these highs, right? So this I'm going to trade Nasdaq. I'm just going to stay bullish for now. The only reason I'm going to stay, the only condition or the scenario where I'm going to turn bearish is if we do see a massive decline to the downside, right? So see a massive breakdown to the downside, right, with a good candle close, then I'm going to flip bearish and look for bearish opportunities to the downside. But for now, chart still looks bullish, and I'm going to stay bullish till the market says otherwise, right? So going on to the lower time frame, so going on to, let's say, the 4 hours time frame, since we now know where we have our confluence, right, which is around this area of support, this trend line, and we know on the daily the moving average is also around here. So I'm simply going to look for a bullish trade opportunity because the confluence around that price level is just so solid right now on the daily time frame. So on the lower time frame, we'll look for trade opportunities. Trade opportunities could be waiting to see more consolidation on these price levels, right? Like I talked about on gold, right? More consolidation on the price level followed by a bullish move to the upside. If this happens, this is just going to be a no-brainer. You go long without looking back, looking twice, but always use your proper risk management. Entry is going to be after the breakout from the consolidation. Stop loss is going to be underneath this area of value, which will coincide with underneath the trend line, or also underneath the moving average, depending on how high the moving average has moved by the time we get the complete formation of this pattern. Take profits is going to be around its highs, obviously, because this is just probably going to be a generational buy zone, right? You can see some bullish momentum shifting right now on Nasdaq, but I do think the best trade opportunity will be waiting to see more consolidation if this happens, followed by a bullish breakout to the upside. And that's how I'm going to jump into this trade on US100, giving us a tighter risk to reward ratio. Now, when I say tighter risk to reward ratio, that may not, look like the ideal stop loss for regular traders. So this will be approximately 460 pips, which is decent in my opinion for trading Nasdaq at these price levels, with a potential first take profit target of 1,500 pips. So this is a risk to reward ratio of 1 to 4, I think, or 1 to 5 as the case may be. So that's how I'm going to trade Nasdaq for now. I'm just going to watch, see what the market does, analyze the markets, be patient, get that perfect opportunity and a confirmation of indeed going higher before we jump in. So the reason why it's not logical to jump in right now, if you jump in right now, stop loss would have to be underneath these lows, and if it's underneath these lows, it's still not safe enough because it's still above the trend line, it's still above the moving average on the daily. So there's a good chance we reverse the downside, tag your stop loss before even going higher. So that's the reason why we stay patient, even if market seems to be leaving us behind. Stay patient, stick to your strategy, stick to your risk management, and wait for that moving average to creep upward slowly. Wait for a good trade opportunity, like I explained earlier, a good consolidation, followed by a confirmation with a bullish breakout to the upside. Then that will be a better way to get in on the US 100 trade. This could be a swing trade for you. If you pick a good trade opportunity, this is a trade you could hold for weeks, because I think price is just going to keep going higher, even taking out these highs, right? That's it briefly for US 100. And lastly, we're talking about US30. So US30, see a bullish chart, and I won't say this is as clean and sweet as we have it on Nasdaq, but let's pull up the moving average. So see, so going to the daily time frame, for example, you can see that on the daily time frame, the moving average seems to lie around this area of value, but price is not quite there yet. So that's why I think there's a good chance US30 or the Dow Jones slowly creeps to the downside, tagging the moving average before we see that massive move to the upside. So there's no guarantee that this happens, but it's just my expectations of the market. And I think if it happens, this area of value over here is going to provide us with the best trade opportunities to get in on a solid trade on Nasdaq, right? So this is what I'm watching out for Nasdaq. So that's my bearish case scenario, and my bullish case scenario will be looking to go long around here, right? So going back to the lower time frame, so let's say the 2 hours time frame, for example, you take a look at 2 hours time frame, now I'm going to get rid of my moving average. Let's just adjust the chart slightly. So on the 2 hours time frame, we seem to be rejected around this area of value. So there's a good chance market opens, we see some price decline to the downside, moving to this area of value, right, within the next few weeks before we move up to the upside. So over here would be a good opportunity to short this market, but there's also a good chance, since Nasdaq is getting close to the lows, there's a good chance US30 just blows off the highs and goes higher. So it's a game of this is a 50-50 trade if you're going to take this, but for me, I wouldn't be taking this trade. The only way I go long on this market will be waiting for a good breakout above this area of value, a retest followed by a move to the upside, a bounce to the upside. Then my entry is going to be after the bounce of the retest with my confirmation of a bullish breakout. Stop loss is going to be underneath the retest, and take profit target first one is going to be around these highs, and I'm going to trade the rest of my positions to go higher. So this is going to be my bullish case scenario for US30 right now as the market stands, right? While for a bearish case scenario, bearish case scenario, excuse me, would be just going short right now with good risk management. Stop loss is going to be above these highs, right? Because we've clearly set a standard for the highs, and this will give you a risk to reward ratio of what? Let's see. Stop loss is going to be around 170 pips, which sounds decent for US30 trade, and your take profit can be as low as these lows here, which is 600 pips approximately. But there's a good chance we blow off these highs because there's no clear confirmation that we're going to reverse. Alternatively, you could wait for a bearish reversal candlestick. So you could see a candlestick blowing upward at the end of the day, closing around these lows, giving you a spiny top, a doji, or something like that, or a bearish engulfing candle. Then wait for the next candle as your confirmation to go short. So when this happens, you enter at the next candle. If it's a bearish engulfing candle, you enter the close of the engulfing candle. If it's a doji, you enter after the next candle. Stop loss can be above that reversal candlestick. This will be a better confirmation for you to go short, and this is the approach I'll take if I want to go short, in my opinion. That's if this do happen. So that's it briefly for this week's analysis. If you have thoughts, please leave them in the comment section down below. If you disagree with me on any of these charts I just discussed, please leave your thoughts in the comment section down below and explain why you feel differently about what I just explained, right? So I can as well learn from you. That's it for me for now, guys. See you next week.